Very good afternoon. You're watching Markets at Lunch right here on ET Now. The markets are witnessing correction right now after the big adjustment of 8%. Couple of percentage points given up is understandable, and that's exactly how it's playing out right now. But the commentary coming from corporate India has started to improve. Not only, it is the auto companies which have started commenting pretty positively after a very bad phase. Pawan Munjal is actually telling the dealers, according to my colleague who will be joining us on the show later, that bad times are getting over. Not only that, Maruti, who has raised prices, cut prices in fact, are also saying that September onwards the numbers actually could improve. Viraj Mehta is here with us to talk about markets and his portfolio as well. Viraj, how are you analyzing the sentiment on street? Is the negativity getting over now, or there are still some skeptical voices on the street after the big adjustment happened?
Hi Ajay, thanks a lot for having me on your show. So as far as negativity on the market is concerned, I think it has mellowed down a lot. At any point, there will not be 100% people who will be convinced that this is going to change a lot of things. But one thing I would like to remind everyone is that market bottoms out way before actually the economy bottoms out. Here, what the government has essentially said after a long time is that we care about businesses. We care about the economy, we care about wealth creation and job creation. This is a step towards that. 0.5% increase in the deficit leading to such and given directly to companies is not a small step, and it's not a popular step if you look at the masses of this country. So they are ready to take unpopular steps to make businesses and job and economy work. This is, to my mind, this is a great boost, at least sentiment wise. Now, will this lead to economy getting better? Not immediately, but over 6 months. We surely think so, and which will reflect in the earnings of a lot of dominant companies that exist today. So I think market may definitely have bottomed out, or we may not see large downside from here, but upside may be calibrated as soon as economy keeps improving.
Fair point. In fact, let me, before we elaborate on that point which Viraj made and talk about his portfolio as well, let me get Utkarsh, my colleague, to get you the latest on Motown, because that was a sentiment, a leading indicator for the sentiment which is there on street as well as in corporate India. Utkarsh?
So exactly, in fact, the timing also really matches. The dealers conference was supposed to happen by Hero MotoCorp, where all the top dealers were presented. The good part is that Pawan Munjal sees optimism in the market right now. A kind of commentary is given dealers is that we have seen a kind of degrowth coming in the industry as well as the company, but he believes the market has bottomed out. Why does he believe that? He's given two options, two reasons why does he believe that. The first one he believes is the kind of announcement in the loans, the NBFC space done by Nirmala Sitharaman will help. Second, the kind of loan mailers, which the finance ministry will be looking at, that is something which will also help. And also he says that there is a pent-up demand for a long time, and this festive season, now, given the fact that the festive season has arrived and the GST cut expectations are behind, people will start buying the vehicles again. He's given a very important number. That's quite an optimistic number, to be fair. He's spoken about almost a 10% growth in the festive season. We do not know whether he's speaking about the remaining festive season or the festive season in a whole, but a 10% positive growth even and on Y-on-Y basis, even in the remaining festive season, will be a breath of fresh air for the otherwise degrowing industry. He also spoke of the fact that the company will not participate in excessive discounting and doling out freebies. Remember, who is he speaking about? He's speaking about Bajaj, given the fact that the next day after the GST cut, Bajaj announced a lot of discounts. The dealers still are expecting something because they say that to compete with Bajaj Auto, they need to have the price leveling, which is not right now, given the fact that Bajaj has cut rates and giving huge discounts as we speak. Also speaking about the inventory issue, which is around 55 to 60 days as we speak, Pawan Munjal ensured the dealer that this will come down to 30 days once the festive season is over. Why is this commentary important? Because when these people, the OEMs speak to the dealers, vendors, they try giving them a clear picture, given the fact that they need to manage the stock, they need to manage everything. At times, the commentary given to the media is more optimistic in nature rather than the real truth. But when they speak to the vendors, when they speak to the dealers, the commentary they give is more what they really feel about. And a 10% growth expectations for the company in the festive season is quite an optimistic view, Pawan Muja.
Viraj, one of the biggest beneficiaries of this particular adjustment are the financials. You also have an NBFC name as part of your portfolio. Of course, the mid-sized NBFCs have got corrected quite a lot on valuation terms as well. But some of them are doing phenomenally well, especially the gold loan ones.
Yes.
One, how do you see the impact on NBFCs for this adjustment, and how's your own portfolio company or the space it belongs to doing right now fundamentally?
So let me break up your question in two parts. One, when we talk about all the NBFCs, if you look at some of the larger ones, the blue-eyed boys, be it Bajaj Finance or HDFC, they were essentially having no liquidity crisis, or they were raising capital at a lower rate than what they were raising last year. Their rates for deposits had actually gone down. Same is the case with gold loan companies, and the disclosure here is that we own one of the large gold loan companies, Manappuram Finance. But apart from these NBFCs, a lot of construction finance companies, a lot of companies who had lent to SME, MSME, they were in trouble. And will this tax rate alleviate a lot of those NPA issues that they were facing? I think it will take more than just the tax cut to alleviate their pain. What this will do to some extent is improve the liquidity and risk-taking ability in the system for some of the larger banks, which can then lend to some of the riskier NBFCs. So the rate for some of the NBFCs may go up, but they will at least start getting some money. Essentially, today they are getting no money, and which is not being passed on anything to the end construction realty guys or MSME working capital issues. So this will lead to a trickle down effect, but it will not be immediate. It will take some time. To answer the second part about the gold loan companies, I think both the gold loan companies are having a really good time. If you look at the growth for gold loan companies is essentially far higher this year than what they were having in the last couple of years. Structurally, these companies can grow anywhere between 8 to 12% volume growth. And to top it all off, these guys are all using that cash flows to diversify into other businesses like microfinance, both with Muthoot and Manappuram, which will basically make them a far more conglomerate financial going forward than what they are today. And if you will compare their valuation on price to earnings, one is trading at, I think, 8-9 times current year earnings, and the other is trading at 10-11 times. I think there is reasonable margin of safety when you buy today, and you should make far more money investing in some of these companies than some of the troubled NBFCs.
In fact, talking of financials, even today, there's a very interesting note by Morgan Stanley, and that is coinciding with a sharp 5% fall in SBI or profit taking. Varun is here, my colleague, to talk more about what exactly is the worry which Morgan Stanley is highlighting in that note, which could be leading to this almost 6% cut now? Varun?
Right, Ajay. So, the big downgrade of this morning, Morgan Stanley coming out and issuing an equal weight stance on SBI with a target price of 330. So the estimate has been lowered, but 330 still implies around a 15% upside from here. Now, the downgrade revolves around NPAs and slippages. You see, NPAs at SBI lie in the lakhs of crores. Bad accounts like ISAR should now be written off, yet we see a consequent rise in slippages. Q1 slippages were up around 10-15% at something like 16,000 crores, which is huge. And it's the largest lender, so people are really questioning what really lies within the book and the quality of the assets and the underlying quality of the assets within the book. Moving forward, SBI has also seen tremendous profit booking. Yesterday we saw a decline of around 4%. Earlier today it was down around 4%. So it completely seems to have erased the FM announcement gains. Now, in terms of profitability, Morgan Stanley prefers private banks because private banks were paying taxes at the highest bracket and likely are set to appreciate more than their PSB counterparts. So SBI, also being one of the PSBs that pays tax at around 35%, should see a refund and should see significant benefit come down. But as the balance sheet is currently carrying DTA, which has not been adjusted for, these benefits won't really come in till FY21, which is 2 years down the line. So in the interim, EPS estimates have been hiked by around a mere 5%, which isn't really encouraging. Also, a huge resolution is the DHFL resolution. 11,000 crore exposure from SBI, been delayed repeatedly, and we're still waiting to hear on that. SBI this morning has asked for an extension on the resolution, so all this is not auguring well for the stock today.
Thanks very much for that, Varun. Viraj, there's one thought in the market right now that the government has been speaking about it, the analysts have been speaking about it, and now several of the industry guys are speaking about it. And the point is that India could be the biggest beneficiary of the US-China trade war. And both China and US are keen to strike trade agreements with India. And the way the adjustment on the new capex, the rate at 15% has been done, a lot of Chinese global companies operating in China will see a case of setting up plants in India. And chemicals is one of the sectors which is, seen as an area of opportunity. You understand that space well. You have a couple of chemical names in your portfolio. What's the outlook there? How's the demand, supply and pricing scenario looking for specialty chemical as far as the listed space is concerned?
Sure. So one interesting fact about Chinese exports is if you look at Chinese manufacturing exports today, almost 40 to 45% of the exports from China come from MNC companies. So a lot of companies, non-Chinese as well, have set up their office manufacturing bases in China to export from China. Now with the cost of labor, pollution issues, everything going up in China, India seems to be a natural place to benefit out of the whole transition happening. It was not happening at a scale it should have happened over last couple of years. And one thing which has happened is the tax rate in itself is good, but it is a sign to an investor which is not in India today that we are ready to welcome FDI capital to India. It's a big sign. Now with this entire thing, I expect a reasonable few reforms relating to labor, and which is again a big issue why you do not have a lot of MNC companies coming to India. A few labor reforms will help in this regard going forward, and now we have seen that this government has the strength to carry that forward. So I definitely see a reasonable uptick in the FDI which comes to India. Probably 6 months out, and projects one by one will start getting announced. Within specialty chemicals, if you talk about some of the major beneficiaries out of this will be API manufacturers. So today, some of the large API manufacturers in India like Aarti Drugs or Granules or DVs, a large portion of their base raw material is actually imported from China. Now, if some of these Chinese companies put up their plants in India or these guys backward integrate, which they are already doing, you will see a large scale uptick in the capex demand from some of the chemical players, which are currently already expanding. One such base raw material manufacturer is a company known as alkyl amines. Now they manufacture aliphatic amines. They are now India's largest producer of aliphatic amines, in line with Balaji today. And if you look at their expansion, they are basically replacing a lot of imports and catering to the demand of the Indian pharmaceutical industry. So they, along with few other players in the sector, are definitely set to benefit post this transition.
Right. What's your view on, Viraj, on PSUs? There's a big story unfolding there. We've been following very closely. PSU divestment, especially the high quality ones, starting by oil refining companies. But we know for sure, our colleagues in Delhi have reported that others are also on the block. Parts of GAIL are on the block. And our Prime Minister Modi did meet a lot of energy companies in Houston as well. BPCL, for starters, any view on some of these high quality PSUs where divestment candidates list is being drawn?
Oh, I think if forget one BPCL, if BPCL is divested, then you will see entire basket of PSUs getting re-rated, right from shipping corporation to Cochin Shipyard to Bharat Electronics to Bharat Dynamics to Rail Vikas to RITES. Everyone will get re-rated because apart from banks, some of these PSUs are extremely high quality businesses which generate ROEs of north of 30-40%, and they're pretty lean balance sheets. If they were in any private hands, they should have been trading at probably 2.5 to 3 times the valuation they are trading today. But if government shows the gumption of divesting any one of the large PSUs, it's natural to assume that a lot of these others will also be divested, and the valuations of them will catch up irrespective of whether they are divested in next 1 or 2 years or not. So if government will go through a divestment even with one of those, I think making a basket of some of these non-bank high quality PSU engineering companies will be a great theme to look at.
All right, Viraj, we'll let you go on that one. Perhaps we'll have you back on the channel one of these days, purely on a detailed discussion on chemicals, since you have such a great grasp on that otherwise very new sector. Look forward to having you again. Thanks very much for your time.